Hey, come over here. Are you struggling to understand where the market is going? Are you struggling to understand the direction of the market? Yesterday, I posted a trade on Euro AUD on my free WhatsApp channel, and I was predicting the price of Euro AUD, and I actually took this trade live. So with this trade, I was able to understand how or where the market was going because I understand market structure. I understand the flow of the market. So in this video, I'm going to be doing the breakdown of the trade. I'm going to be telling you my thought process, how I was able to see this trade before it happened. Without wasting your time, let's get into the video. For you to be able to understand the direction of the market and be able to predict where the market is most likely going next, you need to be able to understand the few things I'm going to talk about in this video. The first one being market structure. I know you must have heard it several times, market structure. But the thing is, market structure is very important no matter the strategy you trade, SMC, ICT, whatever you trade, you need market structure. Why? Because market structure is simply the way the market moves. If I'm to take you into the chart, the first thing you're going to see is up, down, up, down, up, down movement, right? These movements are called market structure. So when there is a series of lower lows and lower highs, that's a downtrend, meaning when there is a series of low, 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 it means the market is going down. And when there is a series of lower, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high, that is the market is going up. I don't want to go too deep in this particular video because I already made a video on market structure. So if you're confused about some of the things I'm saying, just check out the market structure video. Okay, so I just wanted to show you guys a little bit of directional bias and how you'll be able to catch the trade I'm going to do a breakdown on. Okay, first thing you need to know is market structure. When there is a series of higher highs and higher lows, it means the market is going up. And when there is a series of lower lows and lower highs, it means the market is going down. And when the market is stuck in a consolidation, meaning if the market is going up, down, no clear direction, structures are not being broken, it means the market is ranging or in a consolidation. Over here, you could notice I wrote BOS. BOS simply means break of structure. When the market is going up over a series of time, at some point it's going to switch structure, and that break of structure would be something like this: price break this last low, comes back, create a pullback, then break the structure the second time. So this is called a break of structure. Okay, so over here it's all the same thing. If it's going up, going down, the same thing is just on the opposite side. So after you understand market structure, the next thing you need to understand are zones. It can be called points of interest, area of interest, whatever you want to call it. Zones are places where the market are most likely going to react from. It could be resistance, support, whatever. But for me personally, I like to use supply and demand and internal supply and demand. Also, I love to use gaps, which is mostly called fair value gaps. Okay, so the first thing you need to understand about supply and demand, if you see over here, right, when the market is pushing up, meaning uptrend, that zone, the lowest point, which is the swing, that price created a push before breaking structure, this is called a demand zone. And over here, the last zone over here, this is called a supply. So basically going down is supply, going up is demand. It's pretty much support and resistance. Okay, so over here I'm going to take you into the I'm going to show you a little bit more. Okay, and gaps are pretty much when the market creates a big ass push and then it creates a spacious candle. For example, let's just take you to a quick example. Over here, this could be called a gap, a fair value gap. If you notice, when the market pulled back, it didn't come back for this demand, it just went straight to this fair value gap, and then it started to go up. Okay, so I'm going to do a breakdown of this particular trade over here. First thing you need to understand, like I just mentioned, is structure. Okay, so if we're going to read structure, we're going to do that together right now. So over here we have this annotation tool. So I'm going to start from here. So this is the lowest point, this is the highest point. Over here we could see that the market is continuously creating lower lows, which means the market is going down. So over here, price continuously went down, low, high, low, broke this high over here, created a pullback, then broke this high again, which means we're currently buying, we are bullish. Okay, so over here, if you notice, price came back for this demand zone over here the first time, then the second time it did break structure temporarily, but it never created a pullback to continue down. So it pretty much just faked out for a while and continuously went back up. Okay, so technically we are still buying, looking for buy. So over here, price continuously went down and it got stuck in a what? Consolidation. So basically you can find consolidation within a trending market, also within a downtrend and uptrend market. Okay, so consolidation can be spotted even when the market is going down or going up. So basically we know that the market is bullish, but within the bullish move we have consolidations, which is pretty much what we have over here. So if I'm to continuously read structure, what I could see is over here, this was the fake out happened over here, price created a push, broke the structure, so this became the demand zone. Okay, So over here, price came into this demand for a while, created a pullback, and then officially we became bearish again. Okay, so price broke this structure over here. Price broke structure over here. Okay, price broke structure, and I'm just going to put this over here. So immediately price broke structure over here, we are looking for sales. Okay, so once price broke down looking for sales, what I could see is, again, market structure, the thing is, like I said, it's the way the market moves, so it's going to change sometimes from bullish to bearish, from bearish to bullish. So that's just how it works, especially if you are on the lower time frame. For example, right now I'm using the 15-minute structure, which means the market is going to change a lot. Okay, so over here price created a pull, created a low, and over here, if you notice, I put this question mark, which technically means fake out. Okay, so over here in this scenario it was a fake out. So you notice I didn't mention supply and demand. Okay, so over here this was the last zone that price broke structure from, right? Low, high, low, broke structure over here. Then we add this supply zone. The over here, this was the highest point, which was the swing. Price faked out this one, then it went for the higher zone. Some concept on liquidity, which I'm not going to talk about in this video. Price used this as a liquidity to go for this zone. So for me to be able to cash this particular trade, what I had to do was, I knew about the zone, but I didn't get a confirmation over here. Over here was where I got my confirmation. So if you notice, I got in over here and I didn't get in over here. That's because I had a specific way for me to know when the market is ready for me to take part in. So over here, I didn't get in. So when the market started to create a push, create internal structure. So internal structure are pretty much structure that are within the main structure. Over here, we know we are bearish, okay? But then price started to create another structure once it tapped into our zone. So this is literally called internal structure. So what I got here was price started to create internal structure, and that's where I got my trade from. I waited for an extra confirmation, and that's where I got the trade from. It was pretty much a simple trade, although it did take longer. I was going to put my stop loss over here. I was gonna put my stop loss over here, but I realized that price could literally just come higher, stop me out, and then goes to my target. So these days I don't really care about the size of the stop loss. If you notice, this was 28 pip. I don't really mind, as long as I don't get stopped, I'm good, you know. So pretty much price came to our zone, created an internal structure, and then we got into a trade using another confirmation. Okay, so it was a pretty trade, and it was actually a swing trade. I got tapped in on the 13th, which was on Monday, and then it went to TP on the 15th, which is pretty much almost 2 days. You know, it was a beautiful trade. I actually did post this on the free WhatsApp channel, so if you're not in the channel, you're missing out on a lot of gems. Make sure to subscribe to the channel, join the channel on WhatsApp. It's pretty much free. Okay, so anyways, I really hope you understand this breakdown. I'm trying my best to teach you guys how I see the market, how I view the market, so you can learn something from them. And if you like this video, make sure to give it a like. If you're new to the channel, subscribe, be part of the family. I do a lot of breakdowns every time, and also I do vlogs. I travel around the world and I show you guys what it's like to be in another country as a trader. Thank you for watching this one. See you in the next one. Bless.